Hello everyone, on this new topic we are going to discuss and talk about the inducement, one of the most famous, powerful concept, the most powerful one. And we are going to discuss what is the inducement, how to find inducement on the macro specifically, and I'm gonna explain why the macro first before we discuss the intraday trades, the entry, how I see the market, how I really go into the market, and how to find some setups. Alright, so let's start quickly with some retail understanding on the markets. So if you go and type on your search, or you go try to find any course or new course or topics or whatever, you will find something. You will find structure. Okay, the Dow theory, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, everyone will tell you just go mark this zone with the price to tap into that zone, wait for a shift into the market structure, and wait price to grab liquidity. Okay, and this is the inducement actually, and yeah, just enter like this and you end up like that. Alright, so okay, price take out this low, it's a change of character. So right now let's wait the price to go to this extreme again and try to look for a sell opportunity here, shift into the market structure, and you end up like this again, and you don't understand what's really happening. Is the problem on the strategy? Is the problem in the understanding? Is the problem on what? Why that happen? When that happen? So you should understand something. For all the people that they are using supply and demand, I want to tell you this idea. 80% of the supply and demand zones is traps. Okay, 80% or 90% even of all the supply and demand zones you see in the market, it's just trap. Supply and demand, grab liquidity, doesn't grab liquidity, break structure, extreme supply or demand zones, all this stuff that now it's really moving the market, okay, upside or downside, the liquidity and the liquidity and the liquidity. You go marking the liquidity and you start with the internal. Okay, you go to any market, start watching and seeing internal liquidity, external liquidity, and you say and price go from internal to external, and this is wrong idea again. Price go from a liquidity point to another liquidity point based on one thing, based on the volume below or above the highs, not based on the Dow theory, not based on the structure. Okay, you're trading structure, you're really trying to focus on the structure. You understand the directional bias of the day based on the structure. There is a lot of miserable understanding about this stuff. I see some people, like example CTR, alright, they call it CTR, candle range theory or something like this, and they just say just wait the previous daily low to close above or below. Alright, so you go to the daily candles, you wait for the close of the candles to understand the directional bias of the next day. What you are doing in that situation, you're just marking or watching lower time frame structure from higher time frame perspective. If you're doing this previous day's highs and lows are just 15-minute structure or 30-minute structure. Sometimes it can be 1 hour structure based on the daily range. Okay, you go marking this, waiting the close of the candle. It's just like you are waiting for couples of candles on a lower time frame basis to close above that structure. So you're not changing anything. Okay, you're not changing anything, and this is wrong. Okay, this is wrong. You're just marking structure. You're not doing something new or something magic. Okay, let's understand it like this. If we say the 80% of the supply and demand zones in the market is fake, we're just saying that price must take out this zone, right? Doing something like this and take it. Then what? If price take it, should the price, or should we expect price to continue pushing lower, or should we wait the price to take out that zone actually, then wait for a confirmation like this? What should I really expect? And based on what I can expect okay, that's how it looks like. Taking out the low, taking out the high. When price go induce that low, actually, they induce who? They induce buyers or sellers. Okay, this is a demand zone, so price actually is inducing buyers, not sellers. Okay, price here is inducing buyers trying to enter from that specific level, and they give them fake entry and take all of them out. Fake price action patterns, because that shift on the market structure on the higher time frame. On the lower time frame, it's just a specific price action candle on the higher time frame. Okay, the lower time frame shift is a higher time frame price action candle. So they give all those retails fake price action, take them out. Okay, let's go right now to the market and see what's going on here. What we were saying. Let's watch it from the bigger picture. Okay, here's 100. So higher highs, higher lows, higher highs, higher lows, higher highs. Very interesting, very beautiful picture. You can see so beautifully how price respect that demand zone. Okay, I have another demand zone here, and I have a supply zone here. People that was trying to sell here at that level, price go with them a little bit, so made a shift on the lower time frame, another shift on the lower time frame, and take all of them out. People that was trying to buy here, take them out directly. People was trying to buy here, you can see 80% mitigation on that level, take the extreme, and where it takes actually liquidity. Okay, that is specific liquidity points. Not the best swap, but I grab it before it go higher. Go all the way back to that level. What is this? Liquidity, buildups, and grab all of this liquidity here. Question right now is, how can I understand, or how can I know if this supply, like example, is a valid zone to take a sell opportunity? What did we just said in the beginning? We said that 80% of the zones in the market is fake, is a trap. So simple. There is nothing complicated at what I'm saying right now. 80% is fake. Which is mean what? Which is mean that zone, there is 80% probability it's a trap zone. But how I can confirm that, how I can really understand that? We say it again, the volume. Okay, when I say the volume, I'm not talking about I'm not talking about the volume profile and the footprint charts and the deep charts and all this kind of stuff, the iceberg and the absorption and price observe here and doing this here and doing that here and go by data and trying to do this. And no, I'm not talking about this stuff at all. All right, I'm not talking about this stuff. I'm talking about a pure price action right now. Okay, pure price action. Any picture, any place, if you go, price go from a point A to a point B. Not from internal to external, from liquidity to another liquidity. That liquidity, there is some specific amount of money, like example, below the previous monthly low. And the higher time frame we goes, the larger the liquidity becomes. Okay. But how can I understand on which liquidity level price gonna take it and reverse? Right? That is what everyone can ask. I cannot give all the details, alright? I cannot give all the details, the intradays, the times, and the love related stuff. But I'm just gonna give very, very basic and simple ideas. But that's exactly what's going on, okay? That's exactly what's going on the market. And before I explain this, I want to explain something so quickly. I see some people saying, price changed, start taking out those people, those people. All right, I don't want to say the names of each school and each strategy or each, and price change of them. Mister, that you are saying this, it can be correct, okay? That can be correct, all right? But when it's correct, all right? Most of the people saying that price is fractal, all right? Price is just fractal, and the way price really moves on the lower time frame, it's the same. The price moves on the higher time frame perspective. Me personally, I'm against the idea, all right? I'm against that idea. It is a correct idea actually, but I'm against it. And I'm against it because of two things. First, because when you say price is fractal, you're saying that those institutions and those people, the time that it takes, like example, to induce 1 minute, low or high, or the amount of money it takes to take the price from that point to that point and induce a certain point, it's not the same. When we say price gonna induce a monthly high or a weekly high or a yearly high, alright? So just imagine that in your mind. So the way price really moves on the higher time frame, for me personally, it's not the same like the lower time frame, okay? It's not the same thing. Exactly, it's not the same thing really, alright? The lower time frame, there is some mechanism, there is some stuff can change, but on the higher time frame it's different, okay? Because we're not playing, not everyone can take a price 1,000 pips or 2,000 pips or 3,000 pips easily on the higher time frame. On the lower time frame, to take the price 20 pips, 30 pips, 10 pips to manipulate 10 pips. It's not like we are talking about a manipulation of 2,000 pips or 1,000 pips. It's not the same. Makes sense? Let's complete our explanation. So I can see so beautifully what's going on here. I want to tell you something. If I switch to the 3 months time frame, which is an algorithmic logic, and I go mark this highs, this highs, this lows, this highs, this lows, and keep marking like this, like I'm marking random highs and lows. Okay, I can see price grab this one here, and before price grab this one, price actually grab this one. I will switch to the weekly time frame after that. You should keep the idea in your mind. When price grab 3 month highs or lows, which is super major type of liquidity, is showing one thing. Okay, it's showing one single thing, that there is a liquidity there. All right, there is a liquidity there, because this is not any level. All right, this is not any level, not every high or low in the market, there is a liquidity above it. Okay, should talk about this seriously. Not every high or low in the market can change the price delivery, can take the price or change it or reverse if it's not a large liquidity. And when I'm talking about reversal, of course, I'm talking about long-term reversal, 3 months, 6 months reversal. I'm talking about this. You're saying right now, no, I don't trade 6 months. Who is going to open a trade 6 months or 3 months? Just show us how to trade on London and catch some 20, 30 fucking pips per day. If you don't understand this, you're not going to understand how to trade. How you can trade in the lower time frame, okay? You will never understand it. And you can never understand it at all. You should understand this idea, because this is how the market really moves from point to another point. When the price sweep, super major type of liquidity, it's a trap zone. I wait the price to go and grab something internal on this level, which is what? Which is a weekly level. Why exactly the weekly? I align that with the 3 months and the super major types of liquidity. I align it with the weekly, not the daily, not the hourly, not everything. The weekly first. It's the first step. Then I go to the lower time frame. First step, aligning super major time frames, yearly, 6 months, 3 months, with lower time frames, which is for me is the weekly. Then I go to the daily, then I go to the hourly time frame, then I go to the 1 minute time frame to find what's going on there. All right, the people who talk that sell here, this is a trap. Why? Because at that situation, price grabs 3 month low, so the amount of money here is bigger, is larger than the amount of money we have here. What's confirmed that the price is not going to continue pushing lower is what the price actually creates here, and how it reacts with the level of the weekly here at that movement. And the way how the price reacts in here is how I'm gonna follow the price to a next super major type of liquidity. So price go from a large amount of money to another large amount, very, very large amount of money. That's how the price really works. That's how the price really moves. It doesn't move from internal. Alright, it doesn't go from internal level to external level, or from external to external, or just keep throwing stuff. People saying that the trade algorithm just go and wait the price to take out this low and shifts and try to go against the people who guarantee to you price is going to go to the level. Price could do something like this, continue pushing down. Okay, so here skip this like that. Price take out this lows. This lows is what? Super major type of liquidity. What is the next moves? And where is the confirmation? This is the confirmation. Take out the super major, take out the weekly, boom. Question right now is, how can I understand if the price is going to continue pushing down or it's gonna reverse? Very interesting question, very perfect. Same thing, by the way, happened here. Grab super major type of liquidity and go to what? Weekly level. Take out this weekly highs and fill that gap before it goes down to another super major, from super to another super. If I check the 3 months time frame, the next super major type is this one, so that's our target. So as I said, how can I understand, or how we can know if price is going to take out super major type of liquidity and continue pushing higher or reverse? So for that, I'm gonna go randomly. Okay, I will go to a place like example this. All right, this beautiful uptrend. If we go to that beautiful uptrend, of course we can see so clearly from where the price is coming from that level. So boom, and of course we have tons of the highs that showing us super major types of liquidity and stuff. See the monthly time frame. Okay, looks perfect, looks beautiful. Right now I will switch to the weekly time frame. It's funny how people using structure, wait for the break, wait for the retracement. What is the retracement here? There is no retracement, there is acceleration of the price, whatever. So here, how I can really use, you should understand the idea. When I say align the weekly, I really mean it on the reversal, and I mean it on the continuation too. What I mean by this, I mean that this is the most powerful, the most larger, the most long-term order in the market, because this is the most perfect, cheapest, beautiful price. Okay, people was trying to sell here. That was a trap. Okay, price trapped them. Fake BOS here, fake shifts, beautiful buys opportunities here. Okay, whatever. And price got grab 3 month high again, which is this one that we marked. And what you can see, I can see this lows, which is what? Beautiful weekly lows. If you switch to the lower time frame, you will find it like this. Okay, and what is this? Is higher highs, higher lows, and you will find what? Find this. And what is this? Is a shift. And what is this? The supply. So retail traders trying to take a sell opportunity here. Okay, we're taking a buy opportunity here. Why we are taking a buy opportunity? Because it's not the time for the reversal yet, based on the higher time frame perspective. We're totally still bullish. Okay, same thing happened here. Take out this here. You will ask me a question, why you mark this specific weekly low? Why not this one? Why not this one? here like example. So price actually grab 3-month high here exactly. Okay, go all the way down. I have a place where I can expect a reversal, which is this candle high. Alright, it's down close, beautiful candle high. Here I could expect a sell opportunity. Here I will look for a buy opportunity. What is this? This is a perfect. Okay, let's see that. Okay, let's see that on the daily time frame. And that's how it looks like. What is that? It's a demand zone. What retail traders trying to do at that demand zone or support level or whatever, trying to look for some buy opportunities. What price gave them some beautiful price action, some bullish price action, interesting buy opportunities. Take in these highs and take all of those people and takes everyone was setting their stop loss here out. Then what? It looks like a change of character and price going to continue pushing lower. What happened? Take again these people, these lows, take these highs and protect these people, because that was the most fairest price in the market. It was below that low, and booming, creating a trap again. Trap people, fake reaction, liquidity cycle, panic movements, everyone panic, missing the opportunities, and creating and creating a beautiful future trap opportunity. Okay, so I think it's clear. I think it's clear. Same thing happened here, like example, check out this high, which was super major, going all the way down. Okay, to what? This is the less protected one, because it's the one that grab liquidity. Transactions happen here, price go, efficient price action, full rebalance, the full imbalance, tap into the extreme. If I switch to the daily time frame, I will find this beautiful level here. So that can be a very interesting, very perfect and very beautiful one. What happened here? Price go, break the high, trap the buyers here, trap the sellers here. Again, same thing happened here. Take out the highs, take out the lows, trap both sides of the markets, the buyers and the sellers at the same time, and price accelerates higher to the real direction. We'll see another scenario on the EU. Okay, let's switch to the EU. Alright, new perfect, beautiful example. What do I have here on the EU? Price go from these points. How many pips here? 900. Next expectation 1000. So on the weekly, if I switch to the weekly time frame, I can see beautifully how price giving me the level to enter from and look for a long-term beautiful opportunity. I will keep selling till the price hit this and give the All right, so the example, you can, I'm not saying you will take a sell here and keep holding it. All right, some people, they are stupid, they cannot understand this. You will keep selling. All right, so you will follow the higher time frame, real real movements, and keep selling there. Okay, keep it and follow it till the end. Another opportunity here, easy, beautiful, and clear. Other side on the markets, a lot of beautiful trips, a lot of beautiful trips, a lot of beautiful trap zones. Trap zones here, fake reaction. Okay, so now I can see the price taking out this one, nothing happened. Taking out this one, something happened. I can see that the price take out this internal weekly level, so we will look for the buys here, but we're already taking the sells here. Okay, price doesn't follow the, keep taking more money, spending some time. Okay, whenever the reversal happens, price starts spending time, because this is a large, right, this large period of time, there is a high volume, price taking orders here to take the market to another directional. All right, so here is the same thing, keep going down, keep going down. Then what is this? Yes, people, they are trading or trying to trade the supplies, demand stuff, and this stuff. Okay, this rare old stuff, not old, but they have no idea what they are doing. Okay, they have no idea of the logic. Whenever you try to trade a certain strategy, you should just understand. I'm not against any strategy, but you should understand the logic you are trading. Price going all the way up, checking out this high, checking out this high. Building up liquidity, going all the way, beautifully going down. So here, like example, it was a perfect buy opportunity. Some trying to trade here. Okay, I already understand what the price joke. So this is a trap zone. Okay, it is a trap zone. It breaks structure beautifully, everything is perfect. Price go take it. So I understand it's a trap zone based on the cycle. All right, the macro cycle is so clear. I understand why exactly I should wait the price to take out that specific low, not this one, not this one, not this one, not this one. Here I'm keep taking the sells because I'm still bearish. Here I can hedge my position and look for the buy. That does not happen only here, it's happened again, and they give me the second confirmation here at that level. I catch that buy. By the way, I still remember it. It was fantastic. It was just fantastic. On the daily time frame, you can see what the price is doing. Is creating more smart money trap zones, fake break into the market structure, go and checking out this high, not that low, checking out that high again. So I love beautiful traps. Price is given, trap the buyers here before it go higher, and trap of course those retail sellers. And another trap zone, fake reaction. Now price take tons of the money again. Okay, I'm gonna do the same thing. Okay, nothing repeats. I see tons of the money get taken. I can switch to weekly, wait. Okay, so I have this beautiful efficient price action level. Okay, giving some beautiful, wait the price to tap into it. So we look for the buy here, keep following the trend, even if the price take out tons of the money. Don't expect the reversal. Retail traders, that's the problem of most of the retail traders, their psychology, all right, the way of their thinking, in front of the chart before they try to trade. They don't follow their system, all right. They never follow their system. They always try to just go with their emotions. Price go too much higher, or they just keep marking tons of the stuff. So beautifully right now we can see this weekly levels, so I can look for the sells there. Okay, so price check out this one. Why? Because again, that was an inducement. Okay, was it inducement points or something like this? All right, and price tap into this on the lower time frame and go lower. So what is that? It's inducement. Okay, it's just inducement. Price go induce those sellers to go induce the people are future buyers are going to try to expect a buy opportunity here. That's exactly what happened here, because in the lower time frame is a shift in the market structure, and some people trying to buy in some places here. Okay, so that's the place where you could look for the hedge, and you can look for a sell opportunity on it, this one or this one. And what happened? Price fell and continued pushing higher actually. Okay, if we switch to the lower time frame, that's how it looks like. And what is this? Future buildups. Let's go again to the 3 months. Between here, it was actually not only this weekly level. We have a beautiful, very beautiful. There is a lot of levels. You should know how to align it. Alright, it's not in this one. Beautiful build-ups here. Very interesting build-ups levels, where this couple of touch happens. So interesting liquidity points. Switch again to the weekly time frame. Again, what all of the smart money people will try to do here, they will expect price to retrace like this for going higher. They think price is perfect. What happened? Boom, take all of them out. Again, so keep following the weekly levels. That's the most powerful thing you can do. Interesting, very interesting liquidity points price create here. Very interesting fake trip. So this is a fake movement, and right now we should expect a real movement into that level. That was fantastic. That was perfect. All that was just following one thing, one simple stuff, which is what? This. Alright, and we keep following it. Tell the price, start following a new cycle and creating a new cycle. That's how you understand why the price change, how to understand the reversal in a micro perspective, not a lower time frame perspective. So here is the same thing, price go all the way higher. Okay, a lot of stuff. So this one was fake, it was just a trip. Price took nothing in the lift to make that, and I'm totally bullish. I have this beautiful weekly level. I think here, where do we do it? Where do I have a monthly low? So for the 3 months we use the weekly. For the monthly highs and lows we use the daily internal levels. So price just took it, boom. So right now I have this level. I should wait the price to take it to expect very interesting long-term opportunity like this. That does not happen. Okay, that doesn't happen, and price go directly from this point to that point. What is this? Trap zone. What is this? It's a fake reaction. So I can wait and watch the price go into that level, alright, because the confirmation of the buy, it should be, this is right now a fake, beautiful fake reaction, but I wanted something fake, much more fake than this, okay, much more better than this. Price goes grab the old build-ups, because I don't like trade when the price in go back to a build-ups level. I don't trade that levels at all. Okay, I don't trade it at all. If I will look for a sell, for some short sales opportunities, short buys opportunities on an intraday target basis based on the 369 cycle or something. But here I will wait the price to clear up everything, okay, to that level. Then it's going to be a fantastic buy opportunity where we can expect the price to go all the way higher. For the weekly, we already see the price take that weekly high, like example, but that is not enough. Okay, that is not enough to expect a reversal. Should see weekly clear up weekly highs like this, okay, or like this, close to a very interesting price level, not this one. Plus I have a very beautiful inducement here, point where I can expect the price to go to clear it. And the reaction here was expectable, right? We expected that, really expect that already, but I don't have the daily conf yet. Okay, the daily confirmation is not something so clear. So it's a beautiful smart money trap zone. It's a perfect smart money trap zone. So clear one. Go break this low, price came back to the, so right now price is making a fake reaction from the level to go against it. And yeah, that's what we are expecting, and that's what we are waiting for. And that low holding much more large liquidity than this one and this one. Okay, so it's normal to see a fake reaction than something like this. Thank you for watching. Hope this macro of this macro vision on the market, and how we see the price going from a point to another point, and how we use it, how we can understand it from a macro point. I will try to do another video about intraday, how we enter from the intraday, the entries and everything about that. I'm just giving you some perspective, some easy stuff you can learn. We can switch to the intraday later when I will have a free time. I will try to upload a video where I will explain the intraday and how you can trade intraday or scalping based on the same things, alright, and how you can enter and use very small stop loss level on your entry. Thank you for watching. Thank you for waiting. See you on the next video.